Where are the opportunities?
Right. Okay. So despite the gloom, the video does pivot to potential investments,
Yeah.
companies that might actually benefit from this tariff environment.
Interesting.
First one is Rockwell Automation, ticker RO.
What do they do?
They're big in industrial automation, software, robots, control systems for factories.
So the idea is if tariffs push manufacturing back to the U.S.
Those factories will need to automate like crazy to compete on cost globally. So Rockwell could see more business.
And this wasn't happening already. Onshoring.
It was, yeah. The video notes that the pandemic supply chain mess started it. And then you had laws like the Infrastructure Act, the TGS Act, Inflation Reduction Act, all pushing for more U.S. production.
So the tariffs might just accelerate that trend.
That's the theory. Rockwell also pays a dividend, about 2.3%. The video calls it medium risk, medium reward, steady income, recent investments in AI and automation.
Okay.
Second one is Eaton Corporation, ticker ETM.
Bigger company.
Yeah, larger, more diversified. Electrical gear, power systems, industrial parts. Think circuit breakers, stuff for motors, even aircraft fuel systems. They're plugged into the whole U.S. manufacturing base.
It's a broad exposure.
Right. And interestingly, the video mentions they invested over $1 billion in expanding manufacturing in South Carolina, starting back in 2023. Pretty timely.
Good timing, yeah.
Apparently, a big chunk of their 2024 revenue, like 43%, came from their U.S. electrical segment. And they already had a backlog of orders, record profit margins, suggesting that reshoring trend is real.
Okay, so those are specific companies. Anything else?
Yeah, one different approach the video mentions for handling the uncertainty, it's an ETF.
Exchange traded fund.
Right. The iShares MSCI USA Minimum Volatility Factor ETF. Yeah, basically it tracks U.S. stocks that have historically bounced around the least in price. Low volatility.
So the idea is reducing risk.
Exactly. Not aiming for massive growth, necessarily. And the video notes the expense ratio is a bit higher, but it's about trying to find some stability if the market stays choppy because of tariffs or, whatever else.
This makes sense.